Welcome back, everyone. Good to have you here. And if you're new to the channel, you picked a hell of a day to show up. 99% of Bitcoin holders right now are staring at a red chart, feeling the fear, and completely missing what the data is actually screaming at them. And I'm going to show you exactly what that is today, because if you're only watching the price, you are looking at the wrong number. Today on the channel, the biggest ETF outflow streak in the history of Bitcoin spot funds just hit day 11. 11 consecutive days of institutional money walking out the door, and I'm going to break down exactly what that number means and why it is not the story you think it is. Then we're going to talk about Michael Saylor. Yes, Strategy just sold Bitcoin for the first time since 2022. 32 coins, $2.5 million. And somehow, that tiny little number broke the entire crypto market's brain. I'm going to tell you what actually happened and why your reaction to it probably cost you money. After that, we're digging into the macro backdrop, oil above $93 a barrel, the Iran situation, and why Bitcoin is getting crushed while the Nasdaq is ripping on AI. We're going to connect all of those dots. And then I've got a wild card for you at the end that almost nobody is talking about. And when I tell you what it is, you're going to understand why today might be one of the most important days of this entire cycle to be paying close attention. If you're new here, this channel is for people who take Bitcoin seriously. We cover the data, the on-chain signals, the institutional flows, the macro picture every single day. Hit subscribe and ring the bell so you don't miss a single episode, because in a market like this one, being 24 hours late can cost you real money. Let's get into it. Let me start with the number that's dominating every headline today: 11. 11 consecutive trading days of net outflows from U.S. spot Bitcoin ETFs. That streak, which began on May 15th, has now pulled approximately $3.45 billion out of those funds, according to data from SoSoValue. That breaks the previous record of 8 consecutive outflow sessions that was set back in February of 2025. In just the latest single session, another $484 million walked out the door. Now, I want you to stop and think about that for a second, because when most people hear record ETF outflows, their brain goes immediately to one place: sell, panic, this is over. And that emotional reaction is exactly what I mean when I say 99% of holders are missing the signal. Because the signal here is not simply that money is leaving. The signal is where it's going, why it's leaving, and what has happened historically every single time this pattern has shown up. Let me give you the full picture. According to a weekly report from CoinShares, crypto investment products suffered $1.67 billion in outflows last week alone, the second largest single-week withdrawal of all of 2026. Bitcoin funds led that number with $1.44 billion in weekly redemptions, the largest weekly outflow on record for the Bitcoin ETF segment. Year-to-date inflows for Bitcoin funds have compressed from $2.6 billion down to just $1.2 billion in a single week. Assets under management across the funds fell to $141 billion, the lowest level since early April. James Butterfill, head of research at CoinShares, pointed to geopolitical tension around Iran and Israel, combined with a broader risk-off mood, as the primary driver of the institutional retreat. But here's the part that makes this signal so fascinating and so misread. CryptoQuant noted in a recent research note that the 14-day moving average of ETF flows has historically troughed near local Bitcoin bottoms. Read that again. The periods of most sustained ETF selling have repeatedly coincided with market lows, not continuations of the downtrend. Previous periods of sustained outflows, particularly when viewed through that 14-day moving average lens, have often been the exact moment that smart money on the long side was quietly reloading. Now, I'm not saying the bottom is in today. I'm not saying that. What I am saying is this: the fact that we are now at a record 11-day outflow streak, with the fear and greed index sitting at 23, deep in extreme fear territory, with Bitcoin below $70,000 for the first time since April 7th, trading at roughly $69,500 at the time of recording. That confluence is not a signal to panic. That confluence is a signal to pay very close attention. The specific breakdown of the latest session is worth noting. BlackRock's IBIT product accounted for the largest share of the outflows. According to data reported by TradingView and CoinGlass, over $480 million exited Bitcoin ETFs in that single day. And some market participants have noted concerns about the sustained selling from the world's largest asset manager. But let me put that in context. BlackRock's IBIT still holds hundreds of billions in Bitcoin exposure across its total book. Daily flow numbers in a volatile macro environment do not rewrite the long-term thesis. What they do is create opportunities. The capital that's leaving Bitcoin ETFs right now, it's rotating, and it's rotating very clearly. The Nasdaq is ripping on the back of AI. Nvidia alone was up 6% in the same session that Bitcoin broke below 70,000. The S&P 500 is making fresh highs driven entirely by the AI and semiconductor trade. Capital is chasing momentum right now, and Bitcoin, which peaked at $126,000 in October of 2025, is not the momentum trade in June of 2026. Not yet. But here's the thing about cycles. The people who win in Bitcoin are not the ones who chase momentum at the top. They are the ones who accumulate during the extreme fear readings and then hold when everyone else wants back in. The 11-day streak is not the story. The signal embedded inside the 11-day streak is the story. And right now, that signal is pointing at a level of fear and capitulation that has, historically, preceded some of the most significant recoveries in Bitcoin's history. Now let's talk about the other headline that broke the market's brain this week. Michael Saylor's strategy, formerly MicroStrategy, sold Bitcoin. And judging by the reaction, you'd think the world was ending. Here are the actual facts. Strategy's June 1st Form 8K filing disclosed that the company sold 32 Bitcoin between May 26th and May 31st at an average net price of approximately $77,135 per coin. Total proceeds, $2.5 million. The company still holds 843,706 Bitcoin, worth roughly $59 billion at current prices. The coins sold represent 0.0038% of the total stack, 0.0038%, and yet Bitcoin fell to around 69,800, down roughly 4.5% in 24 hours after that filing dropped. More than $93 million in futures positions were liquidated. Strategy's own stock, MSTR, fell 5.85%. The market reacted to the symbolism, not the number. And that tells you something important about where we are in the cycle. Now, Bloomberg reported that Saylor himself had actually signaled the possibility of these sales during the company's quarterly earnings call in May, framing it as a potential balance sheet management tool rather than a change in conviction. The purpose declared in the filing was to fund distributions on Strategy's STRC perpetual preferred stock. This was not Michael Saylor capitulating on Bitcoin. This was Treasury management. The proceeds of $2.5 million funded a preferred stock dividend for a company sitting on $59 billion of Bitcoin. But here's why the market reacted so hard and why I think it actually matters, even if the number is trivial. Saylor built his legend on a single unbreakable promise: never sell. That promise was the spine of the entire strategy thesis. For 5 years, it was absolute: buy Bitcoin, hold Bitcoin, never sell. Holders bought MSTR partly because they trusted the company to ride out every drawdown without flinching. The promise itself was the product. And now the promise has a footnote. A CoinDesk analysis made a sharp point. Strategy has evolved into a far more complex Bitcoin finance machine since 2022. It has preferred stock, leverage, financial obligations. The never sell doctrine was always going to come under pressure as the company's capital structure grew more sophisticated. What we're watching is not betrayal, it's maturation. A company that holds 4% of Bitcoin's entire supply cannot be managed with bumper sticker slogans forever. The practical implication, however, is real, with Strategy breaking its accumulation streak and the CoinDesk reporting showing that most other digital asset treasury companies have either paused purchases or started selling since the market turned lower in October. The list of active corporate Bitcoin buyers has narrowed dramatically. The Bitmine and Strive of the world are still buying, but the broad wave of companies raising capital through stock and debt offerings to replicate the Saylor playbook, that wave has retreated. And that matters for the demand side of the equation. Here is my honest take on this. 32 Bitcoin sold does not change the long-term thesis for Bitcoin, but it does confirm that the narrative era of Saylor will never sell is over. And for a market that had partly priced in that narrative as a kind of permanent institutional floor, losing that story, even symbolically, has a real psychological cost. The price action proved it. What I'm watching is what comes next from Strategy. If this is a one-time small-scale treasury operation to manage a specific financial obligation, and the company resumes its position as the world's most aggressive corporate Bitcoin accumulator, then the symbolism fades quickly. If this becomes a pattern, if we start seeing regular Bitcoin sales from strategy tied to its capital stack, then the narrative shift is real. Watch the next 8K filing very carefully. Now let me zoom out and give you the macro frame, because you cannot understand what's happening to Bitcoin right now without understanding the environment it's sitting in. Brent crude oil is trading above $93 a barrel. That is not a coincidence in the context of this Bitcoin sell-off. The ongoing U.S. Iran conflict with active military operations near the Strait of Hormuz has kept energy prices elevated for months. As CoinDesk reported on June 1st, oil rose more than 3% in a single session after Iran and the U.S. traded strikes and Israel ordered troops further into Lebanon. The macro desk at Laser Digital put it plainly in a note shared with CoinDesk. The crypto market sold off through last week without a clear catalyst, meaning the selling was largely systematic, risk-off positioning in response to a global environment that has consistently rewarded caution over aggression since October of 2025. High oil prices feed into inflation expectations. Inflation expectations reduce the probability of Federal Reserve rate cuts. Lower probability of rate cuts means the risk-free rate stays elevated, which is structurally negative for any asset that competes with treasuries for capital allocation. Bitcoin. Whatever the long-term holders in this audience believe about its ultimate role as a reserve asset, is still being traded like a high beta risk asset by the institutional money that moves markets in the short term. And when oil goes up, rates stay high, and equities rally on AI, that institutional money finds better places to park capital than a crypto asset sitting 45% below its all-time high. But here's the thing about that macro headwind, and this is the part I want you to really sit with. Every single one of those factors is temporary. Oil spikes tied to geopolitical conflict do not last forever. The Iran situation, as ugly as it is, will either escalate to a resolution or de-escalate. The Federal Reserve will eventually cut rates. The question is timing, not direction. And the AI trade in equities, as powerful as it is right now, will eventually rotate. When those macro headwinds shift, and they will shift, the capital that has been bleeding out of Bitcoin ETFs for 11 consecutive days will not stay on the sidelines forever. The Glassnode 14-day moving average signal I mentioned earlier, it is worth repeating. Previous troughs in that metric have historically lined up with local Bitcoin price bottoms. We are not confirmed at a bottom today, but the setup, a record outflow streak, extreme fear sentiment, macro headwinds that are well understood and arguably priced in, a price that has corrected 45% from the all-time high, looks historically more like a buying window than a continuation of the trend. I'm not giving you a price target. I'm giving you the framework to think about where we are in the cycle. And now for the wild card, because this one almost got buried under all of the sailor headlines today, and it deserves your full attention. Blockchain tracking firm Arkham Intelligence flagged, in the middle of all today's chaos, that 10,306 Bitcoin, worth roughly $739 million at current prices, moved out of Mt. Gox cold storage wallets into new active wallets. That is the largest single Mt. Gox estate movement in over 2 months. For anyone who needs a refresher, Mt. Gox was once the world's largest Bitcoin exchange. It collapsed in 2014 after a catastrophic hack. The creditor repayment process has been dragging on for over a decade. In 2024, distributions began, and every single time large amounts of Mt. Gox Bitcoin move on-chain, the market goes on high alert. Because those coins are going to creditors who have been waiting 12+ years for their Bitcoin back. And some of those creditors, not all but some, are going to sell. Now, the Mt. Gox trustee and the creditor community have been managing this distribution carefully. Many creditors are long-term Bitcoin believers who have no interest in selling coins they've been locked out of since 2014. But even a fraction of $700 million in newly accessible Bitcoin hitting the open market, in an environment where ETF outflows are already at record levels and prices sitting below $70,000, adds real downside pressure. This is a genuine wildcard. The timing is either terrible or, depending on your perspective, it's the kind of forced selling event that historically marks the final exhaustion of a bear cycle. The market absorbs the supply, price holds a floor, and the overhang is gone. Watch where this Bitcoin moves next. If it goes to exchanges, that's a sell signal. If it goes to cold storage, that's a completely different story. Let me bring it all together for you because I know today was a lot of data. Here is what you actually need to know leaving this video. 1. 11 days of record ETF outflows totaling $3.45 billion is the headline. But historically, sustained ETF outflow streaks have coincided with local Bitcoin price bottoms, not the continuation of bear trends. The 14-day moving average signal from Glassnode is one of the most reliable contrarian indicators in the current market structure. This is not a buy signal today. It is a context signal. You need to know where we are. 2. Strategy sold 32 Bitcoin. The number is irrelevant. The symbolism matters. Saylor's unconditional never sell doctrine is now qualified. Watch the next 8K. If this becomes a pattern, the narrative changes. If it doesn't, the market moves on. But the era of the absolute promise is over. 3. The macro environment, oil, Iran, the AI rotation in equities, is creating real short-term headwinds for Bitcoin. Every single one of those headwinds is temporary. The Federal Reserve will eventually cut. The conflict will eventually resolve. The AI trade will eventually rotate. Position accordingly. 4. 10,300 BTC just moved out of Mt. Gox cold storage. Watch where it goes. This could be the final supply overhang event of this bear cycle, or it could add another leg of selling. The on-chain data in the next 48 to 72 hours will tell you everything. I'll leave you with this. The 99% who are missing the signal right now are the ones who see a red chart and feel fear, and let that fear make their decisions for them. The 1% who win in Bitcoin are the ones who look at extreme fear, record outflow streaks, historical pattern recognition, and on-chain data, and use all of it to think clearly when everyone else has stopped thinking. That's why you're here, and that's why this channel exists. Before I let you go, and I say this every day because it matters, everything you just watched is strictly informational. This channel covers the main Bitcoin news and market movements of the day for educational purposes only. Nothing I said here is a recommendation to buy or sell any asset. Every person's financial situation is different. Do your own research, understand your own risk profile, and make your own decisions. I am not your financial advisor. I'm a fellow Bitcoin watcher sharing data and analysis. Keep that in mind always. If this video gave you clarity today, please hit that like button. It genuinely helps this channel reach more people who need to hear this kind of analysis. Subscribe if you haven't already, and ring the bell so you get these videos every single day. I am in this market every day, just like you are, and I will be back tomorrow with fresh data, fresh analysis, and whatever the market throws at us next. I'll see you tomorrow.